Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And this was the interview I teased on my daily financial news this morning, something I've been looking forward to all week. It is Simon, the uneducated economist. How you doing, man?
I'm doing amazing, man. Thanks for inviting me here onto your show.
Oh, absolutely. First and foremost, thank you for all you do. I watch your channel all the time. I have lots of people commenting on my channel about all the great stuff you do. So you are really, really helping people. I just wanted to start there.
I appreciate that, man. Thank you very much.
Awesome. Well, what we're going to do here is we're going to talk about real estate. We're going to intro your story to your experience being a home buyer, ultimately leading into what will be hopefully becoming a real estate investor. And I'm hopefully going to give you guidance, maybe answer some questions. If we have time, we'll talk about the economy and all those other great things that I'm sure would be love to talk about. But Simon, give us your kind of personal history with real estate, because I know it starts in the I don't know, the great financial or great recession, which with a little bit of pain. But why don't we just take us through that so we can all level set your story with real estate?
Yeah. Okay. Well, I'll try and take a long story and not make it too long here. But yeah, that's ultimately kind of what happened to me. Back in 2007 is when I bought the house. And I didn't know anything about anything. And I was making fairly decent money doing construction. And everybody said, hey, man, you're about ready to have a kid. You need to buy a house. This is the way you go about things. Go do it. Right. So I buy this house and just kind of cruising along thinking everything's cool. And then the financial crisis hits about 3 months later. Right. So this is like my initial experience getting into real estate. Is I immediately like get hit with all this drama about like, everything's going to crash. Well, I happen to live in an area that got hit with a major storm, right? It was the '07 like storm that just blew the hell out of the place, knocked over every tree and the roof off of every house. And being in the construction game gave me like a nice little, boost of work to do during those next couple of years. So while everybody was feeling like the financial crisis, the Pacific Northwest, if you were working in construction, you actually had a little booming period right there trying to deal with this storm. So I was able to like carry along for a little while, but eventually I just got to a point where the work dried up and there was just nothing to have, and reality sets in, right?
Sure.
And not to go too deep into it, but when you start losing everything and you sell off everything you have and you're trying to make the payments and you're staying in the house and you go 7 years and you finally have nothing left and depression's kicking in and you're drinking a lot and all that other stuff, it's just like it gets pretty bad, right?
Sure.
And so anyway, I end up losing the house, right? I just eventually give up. My family were generous enough to offer me up a place to be, so I could pretty much just abandon the old house, and that's what I did. And so anyway, little time goes by and I figure out the drinking thing and get my life back together and start getting out of debt, and I find myself doing YouTube videos, right? And actually it was the YouTube videos that got me out of debt because it gave me that little boost of extra income when I was, first able to get it up to a point where I was able to generate some revenue off of it. And that was pretty cool because I never thought that YouTube would have been anything. I just had this opinion about the economy. I had studied it during the great financial crisis as I was losing everything. And as I started putting all these pieces together from a working perspective, people started realizing, man, this dude really can explain things pretty well, right? So
Absolutely.
I started diving in deeper into the Federal Reserve, how the Federal Reserve like establishes the Fed funds rates, how that impacts mortgage-backed securities, how that impacts the mortgage market, how that impacts housing. I just started putting all these pieces together and started talking about it, and people were like, hey man, I really like your stuff, keep going. And the channel just kept getting bigger. Well, eventually I was able to get myself out of debt and big things really started happening for the channel. I had met George Gammon through the channel, who he had just started like doing these whiteboard videos. He had gone from like real estate videos to like macroeconomic videos. And I was like giving him shout out saying, hey, you got to go check this dude out. He's really good. And he only had like maybe few hundred subscribers at the time. Like he was just getting started in his YouTube channel, and he was taken back by that. He was just like, hey man, I want you to, come on my show and do a couple interviews. And, he kind of took me under his wing a little bit and showed me some of the stuff that he would improve the YouTube channel. And then if, couple years later, he invites me down to the Rebel Capitalist, the big, economics,
I
conference that
saw
he
that
puts
one.
on.
Yeah.
Yeah, and so here I am. Next thing I know, I'm on stage speaking with with all my heroes.
Yeah,
Like
yeah.
I'm up there. I got like Robert Kiyosaki. He's up there on stage. He goes on right before I do. I got
Wow.
like Ron Paul, who was like my favorite dude back when, I was losing everything. I was trying to find a politician out there for the answers, and he was the only one who was really smart enough to actually say anything. But anyway, not to get into that. This is kind of what ended up happening with my life. And so when you have like a decent, following on YouTube and you're able to put out some decent videos because you're in the lumber industry and lumber is taken off to all-time highs and everybody's trying to figure it out, and you have like videos that you've been posting for years prior to lumber doing its thing, everybody's like realizes, oh man, this guy really does know what he's talking about. And here I am, like in a position in which that I have some savings. I'm completely out of debt. I have some savings, and I'm in a position in which that I have to move because everything's going like my landlord's like telling me, okay, man, I'm going to sell this house. Right. And I'm looking, okay, no problem, bro. I'm renting. I understand. I got a huge network. I'm a big YouTube star, whatever. I'll find this house, right? And I go looking for a house, and there's no place to rent in Astoria. And now I'm
Wow.
stuck, right? I'm like, okay, what do I do? And I realize, man, I'm going to have to buy. I have no other choice. It's either that or
Yeah.
I have to leave my area. And so I'm really nervous about this because now, like, I'm thinking, okay, prices are at their all-time highs. I'm like,
Mm.
I'm looking at like, this house that I would assume just a few years ago would have been like $280,000 is now close to $500,000. And I'm just like, oh man, what am I going to do? And I eventually was just like, well, man, either you're going to bail out of the area or you're going to buy a house, and that's the house you're choosing or you're looking at. And so go for it. And
Okay.
I tell you, man, if you want to hear this story, this is where it gets really crazy because I have like, I have what I thought was a decent down payment. And I'm like, okay, cool. So I got this down. I go to a buddy of mine who is a mortgage lender. I'm like, bro, okay, check out my credit,
So
check out
what year is this? This is
this is
21, early 21?
no, that was on the previous house.
Okay.
That was one during the foreclosure. I'm talking, this is like as far as YouTube and stuff like that and becoming like into my more recent situation. This recent house that I have purchased, this all taken place in the last 13 months,
Like, so
right?
late 21, early 22.
Yes. Yep.
Okay, got it.
And
Yep,
so
yep.
yeah, that would be correct. Yeah, I'm sorry. Yeah. And so yeah, like because it was, when did the house, I eventually got the house like right at the end of October. It was like, I think I moved in on like October 21st or something like
All right.
that.
So this is happening summer of 21. You're getting told your
Yeah, that
landlord
I'm
saying,
going through.
got it.
Yeah,
Okay.
that I'm going through all this stuff on it. And so I go to my landlord, or not my landlord, I go to my mortgage lender, and I say to my buddy, I'm like, hey Greg, listen, here's how much money I have to put down. And he was like, oh dude, that's cool, right? He's like, yeah,
I got you. I got you.
yeah, he's like, what's your credit? He's like, oh, 800 credit score. Oh, bro, yeah, go
Oh,
find that
easy,
house, man.
easy.
Go find it. Yeah, he says it's a slam dunk. And I'm like, oh, all right, man. Okay, I'm off, right? So I find this house and I'm like, okay, here's the house. You guys go figure it all out. And then there was a little complications because I've worked the industry as far as building homes. I work building supply. I sell lumber for a living. There was like a little issue with like the roof, right? And I ended up like complaining about this roof and really making like kind of pitching a fit about it. And it actually ended up benefiting me later because I did this, because they ended up like taking like $5,000 off the closing cost or something. I forget exactly what it was that they had done.
They gave you some seller credits.
They gave me some, yeah, and I was like, oh, I'd probably end up paying for it in the end, but whatever. I feel a little bit better about it. So anyhow, I just like, but I just remember I had complained about this roof and pitched a fit about it, and so anyway, it's like 2 weeks before this house is supposed to close, and my buddy comes to me, Greg, my mortgage lender, and like I said, this is a guy like I know him, I know him well, right? I
Right.
mean, we hung out
He's your
before.
boy. Yep.
Yeah, this is my boy. I didn't even go to anybody else. I just went right to Greg, and I'm like, Greg, dude, I got to get this. And he's like, okay, man, let's do it. And he comes to me, and he was like, dude, what happened with the foreclosure? And I'm like, what the hell?
Oh,
And I'm like, what are you talking about? And he was just like, bro, he was just like, I don't know why it doesn't show up on your credit report, but the underwriters found this foreclosure and it happened within the last 5 years. All these mortgages that were
right.
available for you are no longer available for you. And this house, like I put $5,000 into escrow. I mean, like I
EFD,
don't,
yeah. Earnest money. Yep.
yeah, all the earnings, and like I'm like I looking at Greg and I'm like, okay. No way. And he was like, I don't know. He's like, I'm gonna have to get back to you, man. And I'm like, oh, son of the right.
Yeah.
So anyway, so that foreclosure, and this is something that I never, like, this is one thing people ask me about or whatever, and I tell them never do this. Oregon happens to be a non-recourse state.
Mhm.
And so I threw every single letter and didn't answer a phone call away. Like I threw all the letters away and didn't answer any phone calls. And I didn't address anything about it. Not the court orders, not nothing. Like I pretended like none of it existed.
Right.
And that came back to bite me so hard. It came like, because now because it didn't show up on my credit report, but the underwriters found it. Now I'm screwed out of these loans. And my bro comes to me, Greg, he says, okay, man, listen, I found a loan for you. What happened with the foreclosure? How come it foreclosed on you?
Mhm.
And I'm like, okay, let's see. It was a great financial crisis. And then my wife was pregnant and she lost her job. He's like, whoa, wait a minute, right there. You had a birth of a child? And I was just like, yeah. And he was like, and she became unemployed and couldn't, find gainful employment after that. And I'm like, yeah. And he's like, you got tax proof of that? And I'm like, well, yeah. We file
Yeah.
taxes,
Yeah.
right? And he was like, that's
Yeah.
what I need. Get me that. Okay. So step one, now, how much money do you have? And I'm like, I told you. And he was like, nope, you're going to have to come up with a lot more than that, like twice as much money. Right.
Yeah. Go turn over the seat cushions and all of that.
And so this is the case that I'm in now. Right. So I'm like, oh, crap. All right. So I go and I start searching out, and I am digging for every little dollar that I can find. And I'm just like, really what it come down to is it took every bit of savings, my emergency cash fund. I took, God, what did I end up like? It was, I had a bunch of money tips from PayPal that I had basically saved every single tip that anybody had ever sent me from PayPal over the course of, doing the YouTube channel back even before I was getting monetized and stuff. People would like, hey man, great work. Here's $5, here's $10, whatever. I had all that money. So the YouTube fan money I took everything that I had. And when it was all done, like when I went to Greg and I told him how much money I had, I said, this is it. This is every last dime. And I was about ready to start cashing in like silver and stuff like that to do this. And he was like, nope, that's going to do it right there. You got it. When that was done, I cut the cashier's check. It left me with $300 in my savings account. That's all the money I had left when I was done. And that was 13 months ago when I did that. Right. So, so anyway, that's what happened with that. It left me absolutely completely broke. And here's the problem with it is that I also used the savings that I was going to use to pay my taxes with to put on that down payment. So I borrowed the money from the IRS too, right?
Well, there are these extensions. You can always put that in. Yeah.
Right. And I figured, okay, so yeah, I'm going to have to like deal with the IRS later on. But I just kind of buckled down and I was able to, I did a few things like some sponsorships and stuff like that, and I was able to acquire the tax money that I needed to pay my taxes off. So, but that left me broke again, like 6 months later. So so here I am, like I'm getting back to the point, and it's nice having the YouTube channel, right? The YouTube revenue. I've kept my payments, like my expenditures out there, incredibly low. Like I have very little debts. I drive this car. My wife has a very modest car. She works a full-time job. I work a full-time job. Like I said, I got the YouTube thing going on. I really don't have any kind of credit card debts or medical debts or anything like that. Like I just have my house payment. That's pretty much it. And Sarah's car payment, my wife's car payment. So that's pretty much where I'm at on things.
Cool.
I did have to kind of make up for some lost time on stuff. Like I don't have a whole lot of things going on in my life because I was such a broke ass for so long. So I'm trying to like, bring things into my family and my life that's, we didn't have, like, some of the material things, just to have some of the joys and comforts and luxuries of life. I mean, if you're
Nice.
no point in having the money if you don't enjoy it. So
Absolutely.
anyway, that's kind of my whole story in a nutshell there, man. I hope I didn't just
no, that was awesome. I do want to kind of compare and contrast the one that you lost with the one that you own now. First and foremost, a lot of people, and I'll call it the 07 crisis, just for whatever to call it. A lot of people took out adjustable rate mortgages, neg-am loans, all of that. Did you have one of those, or did you have 30-year fixed rate debt back then as well?
I had a 30-year fixed rate debt.
That's good. Okay.
I put let's see, I think I put $500 into escrow, got $80 of that back. I had no down payment.
Probably a 6% mortgage ish.
I think it was like 6.25 or 6.5, something like that. I can't remember exactly.
Yeah, I bought back then, so something in the sixes. What was the purchase price in 07? Do you remember? Like 250-ish?
$167,000.
Okay, 167. So 30-year debt, 6.5, 167 grand. The one that you just bought in October of 21, almost $500,000, I think you said.
Yeah, it was. Man, I'm kind of embarrassed to say it. Okay, it was $172,000 or $472,000.
And you have 30-year fixed rate debt again.
Yeah, I put $42,000 down on it.
Probably. Well, you bought in October, so you might have like a. Do you have something sub 3%?
I had 3.25.
No. Well, that's 3.25 with a foreclosure.
Yeah.
That's 30-year. That again, one of the things that's very interesting about the next couple of years, in my opinion, Simon, is unlike the last crisis, the debt is an asset, right? I think that 3.25 30-year money is an asset. Frankly, you have 30-year debt less than the funds rate, right? Funds rate now is what, 4.5 or something?
Yes, that's correct.
That's an asset for you. You're like, I'm not moving anywhere. I'm staying right here.
Yeah, that's exactly right. Well, I mean, I just look around at like some of the maybe just take some of the other things out of it and just kind of look at the reality of the situation. I went up to talk with my friend. She was painting an apartment. She does interior trim work kind of stuff, and I went up to look at this apartment she was working on. Beautiful view of the river. I mean, just absolutely gorgeous. $1,850. And I'm like, holy crap, that's just a few $100s less than my payment on a 4-bedroom house out in the country. So I'm like, oh yeah, there ain't no way I can't move. Like, I can't take my family.
You are locked.
Yeah. I'm stuck there.
Yeah,
like it's actually kind of like, it's not actually a pleasant feeling almost. It's just like, man, this thing is too good to be true. I can't move anywhere else. It's like,
yeah, but that's one of the reasons that I think the Fed broke the housing market is something I've said, but they didn't break the market by raising rates. They actually broke the market by keeping rates low for basically a 2-year period, which caused not only purchases like your situation, Simon, but I don't know, millions of refinances, right? We have, I don't know what the numbers are. According to Black Knight, I think it's 50% of residential loans are sub 4%. I mean, there are so many people just like, there's like you, like, I'm not going anywhere. And that's going to keep transactions low.
Now, I don't want to give like too much away because like people are going to figure out where I live if I keep talking. But I mean, I understand like my area is a very kind of unique area because it's definitely changing. It's becoming more of a retirement community area. The hospital district is exploding with like, new buildings and new facilities and all kinds of stuff. It's definitely, you can definitely tell that the people here are definitely an older population. And so I have a feeling that that's the reason why I'm experiencing a lot of the gentrification in my area, as far as like, the places becoming as expensive as they are. But the Zillow estimate on my house over the last year has gone up so much. It's like,
is it up 20%?
Yeah, at least.
Wow.
Here's the thing, like about it, it is so scary how fast it's moving up. Like I look at it and I'm watching this thing and I'm like, this can't be accurate. It goes up so much in a month that my wife and I combined with our page with our jobs, our day jobs, including YouTube, don't earn enough as much as the house goes up.
Well, that doesn't suck.
No, it does because that can't be reality, bro. Right? That's
No,
not real.
yeah,
That's
yeah.
not. That's
It's
not something
certainly
that should
not,
be.
it's not a trend that you can count on. That is for
There
darn
you
sure.
go. That's what I
Yeah.
should say. It's not a trend you should count on. That's exactly right. You know, I
Yeah, yeah,
mean,
yeah,
and so I look at that and I'm like, okay, well, this is eventually going to come to an end, and then and then
yeah,
we'll experience something different from that point on. Yeah,
yeah.
right now I'm looking at it and I just go like, oh my
So you're
gosh,
happy
what is
with this
going on?
purchase?
I am ecstatic with this purchase, man. Like I am like for something that absolutely drove me bonkers crazy.
Yeah,
It's one of the best decisions I think I've made in my life so far. You
that's
know?
awesome. That's awesome. Well, let's switch gears to real estate
Okay.
investing. That's how we were connected. We both know the lumberjack. We both have some viewers that are common that said we should get together. Um, I understand that you again, what's been told to me is, hey, Simon's Uneducated Economist is potentially looking to become a landlord, right? Buy a rental property. Is that a fair statement?
Yeah, I mean, I try to keep my options open all the time, and being in this game of studying the economy and the macroeconomics and everything that goes on, I have been involved with so many people who have money, and all of them are involved in real estate, every last one of them, right? So it's
Mhm.
just like, okay, so obviously, if you're gonna
There are
be
signals out there I better pay attention to.
right, I mean, it was just like, okay, man, you can talk all day long, but then it's time to like, start doing something, right?
Yeah.
And everybody you look at who has all the money, all of them did it in real estate, like all of them big time, right?
Yeah.
I mean, there's guys who didn't, who might have done something else, but all of them who I talk to who have the money have all done it with real estate. So
Awesome. Well, I've been doing this 22 years. I don't know if you know my story. I start out being a stock market guy, turned 7 grand into 200, only to lose 80% of it in the dot-com crash. So I go way back, right? Out of that, I turned to real estate. I buy my first rental in 2002. I'm up to 8 houses in '07. I see the market getting wacky because all my mortgage brokers try to tell me to get these neg am loans because nothing cash flow in '07. So instead of doing that, I 1031 into apartment building. So I go from 8 to 80 units. My market rolls over 75%. I'm not affected. My rents go up. We're living large. The market, again, my market goes down 75%. I buy almost all the way down because I have no idea where the bottom is. Uh, I borrow a lot of private money at 10%. We go from probably 80 units to 120. The market turns around. Ultimately, my wife and I retire financially free because of real estate. She retired like 10 years ago. I retired 5 years ago at almost 200 units. So that's kind of my story in a nutshell. So very real estate oriented.
yeah.
One market, Fresno, California. So I help people, but I am not like most, I don't know, YouTube guru, whatever, right? Because I talk to everybody about getting to four. I think four rentals changes your life. You can always get more, but this isn't about 100. This isn't about 1,000. Second, it all starts with getting a buy box. One of the things I would tell you, Simon, or frankly, anybody, great, you understand that real estate provides wealth, but let's do this the right way. Simon, have you ever played golf by chance?
I haven't.
Have you picked up a golf club?
I have.
It is an uncomfortable feeling the first time you swing it. Yes.
Absolutely.
It's just wild, right? It's like, how does this work? Right. I actually think real estate investing is much like a golf swing. It must be practiced over and over and over again. So the first thing I tell everybody to do is get what I call a buy box. So let's talk about what my buy box was in 2002, and you can relate it to your area. So I chose Fresno, California, which, oh, by the way, Simon, I've never lived in. It's 2.5 hours away from me. I live in the Bay Area, which is stupid expensive. Doesn't cash flow. Don't buy for appreciation. Cash flow day one. So I didn't choose Fresno because Fresno is 1 million people. It's too big. I chose a zip code 93703. But even that zip code, Simon, is too big. And oh, by the way, there are too many asset types, right? Single family homes, condos, units, apartments, all of that. So I chose 93703 single family homes. But even that was too much. Then I went 3 or 4 bedrooms, 2 baths, 2-car garage attached, 2-car garage. I think 1,250 to 1,750 square feet. So I put in a lot of criteria with this one goal in mind. I wanted the active listings to be somewhere between 20 and 40 because I was a busy full-time employee. I was on an airplane 5 days a week. What I had to do is I had to figure out that market. I had to figure out just a little speck of Fresno, California. And you have to look at that market every day and document what's going on, because what I believe happens over the course of 60 or 90 days is ultimately you will learn what average is. And once you know average, then you could hunt out good or great deals. So my entire effort is focus, because most people are unfocused, Simon, right? It's like, hey, I want to get into real estate investing. I'm going to look here. I'm going to look there. I'm going to look at this. I'm going to look at that. I'm going to go in state, out of state. Unfocused, right? So a buy box is permission, but it is most importantly permission not to look at things. I do not think anyone should write an offer until you can articulate what an average deal is in whatever buy box you choose. I'll stop there, let you ask some questions because there's a lot of meat around this, but I don't know where you want to go.
So, okay, so no, I think I'm getting this. So like when you go and look at a particular area that you're going to go into, you are finding the criterias that you need in order for that to be like suitable for your needs, right? So you're not going to try and establish where that property is in a particular town, but to try and find what it is that is meeting your needs in what town that happens to be in. Like,
Yeah.
instead of like, just saying, hey, I'm in Astoria, so I'm going to try and find something in Astoria, but Astoria may not be the place I need to be. It may need to be someplace else, like, over near Hillsborough or something like that. I understand. I think I'm getting what you mean by the, buying the buy box. So
yeah. So what I would tell you, it's the buy box and the daily repetition. It is that golf swing, right? The first time you look at whatever your criteria is, it's like the first time you picked up a club. It's like, what the hell is this? Where do I put my hands? How do you swing this without bouncing the club off the ground? But when you look at that criteria over and over and like daily, it's called daily, or what I call daily discipline. 30, 45, 60 days later, you're going to have this aha moment. It's like I get it now.
mm-hmm.
In
now
my buy box. Go ahead.
On that average, now, how do you figure that out? Like, what is it that you're looking at? Like, I mean,
Great question.
Like what instruments is it that you're following that says, hey, this is giving me the clues that I need?
So for a landlord, we'll start simple and then we'll dive down where you want to go. There's a few things. So in my world, obviously the purchase price is where you start, but only because you're going to be putting a down payment. So again, I'm a very simple person. I want to know what the yield, some people call cash on cash, some people call return on capital. I want to know the yield of this investment. So the denominator, right, the bottom number is down payment, closing cost, and what I call make ready. Make ready could be 0 if it's turnkey, or if you're buying a total fixer, could be a lot of money, right? So that's the denominator. The numerator is rent, monthly rent, minus all expenses, mortgage, taxes, insurance, property management or not, reserves, utility, whatever all of that is. At the end of rent minus equals a monthly cash flow number. Multiply that by 12 because I want a yearly yield. So you take that number divided by the denominator, which is your out of pocket, and that produces a percentage. So the goal in your spreadsheet is not to overcomplicate it. My spreadsheet has like 12 or 13 rows in it, or columns, because I have the purchase price, down payment, closing costs, make ready. That's one set. That's the denominator. And then I have rent minus all my categories. And then on the end, there's a yearly cash number. And then I like purple, so my yield is in purple, right? The percentage yield on that deal. So what you'll do on your spreadsheet is just row by row, 1, 2, 3 Main Street, 1, 2, 3 Purple, 1, 2, whatever, right? All the streets. You're going to be putting that out, and it's going to feel uncomfortable because you don't know squat yet. You don't know what average taxes is. You don't know what property management. You don't know what make ready is. Maybe you do because you're a construction guy, but others don't. That is going to be permission to start networking. Who do I need to meet? Well, I should talk to somebody in title. I should talk to someone here. I should talk to someone there. So again, in the beginning, building out the spreadsheet is also highlighting who you need in your network. At the end of the day, your spreadsheet will have 100 rows on it, 120 rows. But at some point, you're going to go, I got it. When I look at everything I've looked at the last 76 days, my average yield of my buy box, which again is this zip code, this type, is 4%. I'm just making up a number.
Mm-hmm.
I'm not here to judge, Simon, what 4% is, good or bad. 4% is average for your buy box. You then get to ask yourself, hey, is 4% a good enough return? Because shit, I can get 4% in treasuries.
Sure.
So
right. No, I think I'm getting that part. So one of the things that I'm thinking, like, if I was to sit down and start doing research today, where would I go to look? Like, what websites, what things would I go to? What listings would I be finding? Do I just look at, like, what do I just literally just look at like Zillow and see what houses are selling for?
Yeah. So I would, I built my entire career being very simple. I went to what is called realtor.com today. I don't have any access to MLS. I have no special access. I'm just a guy on an airplane in a different hotel every night. Right. So I just look for what was available. Because again, what I'm trying to do in the first 60 or 90 days, I'm actually not trying to buy anything. I'm trying to figure out what the average of my buy box is. So just look at available price. Don't do mailers or any of this other stuff. Until you can swing the golf club, which is tell me what average is, you're staying on the driving range. When you write an offer, that's like going to a golf course, right? You're on a driving range. Just keep swinging the club. Right? Yeah. Don't overcomplicate it. Just go to Realtor or Zillow or Redfin, but always go there, right? Yeah. Some people get confused. Like they look at Realtor one day and then Zillow the next day. And no, just be boring. Don't overcomplicate it. Yeah. And then what you do, so the first day you fill out your spreadsheet, it'll take you a while because this is the first time. But day 2, what changed? Oh, this went pending. This came back. This had a price drop. Because what you're going to find is your market, it's changing. Is it trending down? Are days on market getting longer? Do we have bidding wars? Because you can check when Zillow on what it sold for. Right? Is it below list, above list? All these little factors will start to tell you how your buy box over time is behaving.
Okay. No, I think I get this. So just out of curiosity, it seems to me, a couple of years ago that people were overpricing homes and it was just selling, right? And I would watch stuff and it was very confusing because it's just it was I couldn't get it. It was just it was just kept going up, but there was no other direction to it. But we're starting to move into a different era, where things are not going up like they once were. And so it is something new to learn, right? I mean, this is not.
Well, you're absolutely. So let me give you so again, I live what I breathe, right? So I've looked at my buy box, I don't know, almost every day for 20 years. So for the last 2.5 years, I have got 0 deals out of the MLS. What does that mean? It means I looked at my buy box for 1,000 days and didn't get a deal because of what you just said. People are overpaying. I only do great deals. And if some idiot's going to overpay, that's going to turn my yield negative. I'm not doing that. But what I've got in the last 7 weeks, 2 deals. 30% below market, below list price. One already had a price drop. Why is that? It's because I never stop looking. I already know the market's changing before anybody else. People are afraid. We got 87% of buyers saying it's a bad time to buy. I like those odds. That means I'm only competing with 13% of people.
That's right.
So I got 2 deals out of the MLS in the last 7 weeks.
Yeah. And so it just forgive me because I am believe me, I'm just really naive and ignorant on a lot of this stuff.
I'm here for you. Ask every question.
Yeah, I get it. Really, are these deals that these 2 deals that you got, are these people who are just are they is it a divorce, death, destitution kind of thing, or is it somebody who's just really missing it, or is it really the market just changing like that and you're fine? What is it that caused this deal to occur for you?
So both of these deals were vacant. One, the family had moved to Texas, and this was just the payment, just something they didn't need. And oh, by the way, they bought it 20 years ago, so they didn't owe anything on it. They're like, get rid of this. We don't want it. We don't want a vacant property. The other one was a death, right? Dad died, kids want it, kids don't live in the area, all of that. So this is an important question, because I believe one of the things we're going to see in real estate is the demand curve shifted, or the transaction curve shifted. Supply and demand, as you know, as an educated economist. Housing for a decade was about 6 million transactions because we had move-up buyers. Move-up buyers are a sell and a purchase. I believe the move-up market is dead, as in we talked about your situation. Why would I move? I can't move. I'm stuck. So that market's dead. So what we're still going to have transactions. They're just going to be death, divorce, health, these other reasons. And, those will happen. So yes, those are the two stories.
Okay. Yeah. And that's kind of what I'm curious about is like really, I mean, and forgive me for using this kind of word, but it's more of like, predatory into the market, right? You saw the opportunity before anybody else.
Well, again, I've looked at my market every day for 20 years. I know where the opportunities are. And again, I want to be very clear. These were on market. One was on market for 72 days and the other one was 39 days. Yeah. I have no special access. I just look every freaking day.
And I'm not trying to be like, mean by saying that statement on it. You buy when there's blood in the streets, right?
I buy, yeah. I hate competition.
That's what I'm looking for.
Yeah,
that's why
I hate. Yeah.
But that's what I'm saying. Like, do I recognize the blood when it's in the streets? That's what I'm saying. Like, people may not be recognizing that their time to buy, they're missing it, right? And that's where, like, that's what I'm saying. It's just like, okay, so everybody's calling out this housing market crash, and I'm like, okay, so I'm trying to find it, right? I'm trying to find the evidence of it. It's part of my channel. It's just like, hey, okay, let's look at it.
There's no housing crash. There's
right, and that's what I'm finding is that I would love for there to be one because I want to buy into it, right?
I would like nothing better than a repeat. It's not coming, buddy.
Okay. Yeah. And I agree with you on that. And that's where I'm trying to find is just like, okay, so there's got to be some blood somewhere.
Well, I wouldn't call it blood, right? Again, I've been around a while. I know what blood in the street is. I've been there. I love to buy when everybody, I love to get it when people are swimming naked. This is not going to be the debt crisis where the debt blows up. You know where the debt's coming? It's going to be in multifamily and commercial. Okay. That will be debt, but that's a year away still. Right? Because they have bridge debt and all that. But let's stay residential. Most people don't have to sell. Most people's payment, as you said, is below rent. Like, what would it cost you to rent a 4-bedroom house? Way more than your payment. You're not going anywhere.
Well, yeah, a friend of mine did get it. It's a lot. It's a lot more than what I'm paying, but it was surprising. Like, it was lower than what I thought she was going to pay, but it is
more than your mortgage payment.
Yeah, more than my mortgage payment. Yes.
So again, if you or your wife lost your job, you will take the unemployment and get another job. You're not going to be forced to sell your home. That's what all these people are like. Hey, all these foreclosures are coming. No, they're not. No. Yeah, we'll have some, but that's because they were turned off for 2 years.
Yeah. And, I mean, I try to find it. Like, I love trying to look at every angle of everything, to try and find it. It was just like, if this is going to happen, then let's find all the reasons why it wouldn't happen, right? If we can't prove that, then maybe it will happen. And that's the thing. Like, I try to look at the housing market from those kind of perspectives. And ultimately, like, what is it going to cause housing prices to fall is a rise in inventory. And you have to find where is the rise. Yeah, where's the rise in inventory going to come from? So, okay, let's call it. Let's say, okay, the rise in inventory is going to come from the overbuilding from home builders. Well, that's not happening, not even close. In fact, they're done taking out permits and doing new starts, and they're working off their backlog of houses that they couldn't finish during the supply chain breakdown.
They're going to sell it to private equity, like Nanar said, 5,000 at a time. Bingo, bango, supply's gone.
Yep, supplies. Yeah, supply doesn't seem to be coming on the market from the home builder side, the manufacturing part of things, right? So, okay, cool. Not coming from that side. It's going to come from the foreclosure side of things. Well, let's see where the foreclosures are going to come from. They have to come from people being unemployed. And that doesn't seem to be the case at this point. Not saying that it's not going to happen, but it's not happening yet. Right. And I don't see anything like really indicating that that kind of major event is going to happen, because really you
Let's
have to
talk
have,
about that. Let's talk about unemployment. We both are
yeah.
right. I have a degree in economics, an advanced degree. You've been doing this a long
Wow.
time, so we both get it. We both get it, right?
Right.
Unemployment today is 3.7%. Let's say it goes back to 5%. That's about 1.2, 1.3 million more unemployed folks. Okay. Well, if you look at the JOLTS report or you look at these other things, there are plenty of openings to absorb that. Last time I saw the JOLTS was like 1.6 openings to jobs. So if you get unemployed, you can get another job. It will probably pay, or it could pay less, because I'm in tech, right? Facebook lets you go, Amazon lets you go, Google lets you go. Okay, great. You're not going to make 350 OTE. You're going to make 280 at some private company. That's what's very different this time. And again, I did this through the dot-com crash, the Great Recession. Yes, we will have more unemployed, no doubt.
Yeah.
But it's not going to 9%.
Yeah. And I really agree with that. Like, I mean, even if still, like, even if it did, like the unemployment did rise, to be honest, there's so many ways of making money now. It's just like, I don't see how people like would would let their house go. Like, I just don't.
Well, and again, let's talk about the foreclosure process. And again, you told it in your story. You were in your home struggling with this for 7 years.
Yeah.
You can
I
leave.
mean,
And oh, by the way, you know what was different this time? You ever hear this thing called mortgage forbearance? That shit wasn't around in 07. Now
that's
you
right.
fill out some freaking form on a website and you get a year free. These
Yeah.
foreclosures are not coming. It's not coming. I'm sorry.
Yeah. You know, and that's really like, you know, and that was like, even if they were to end the forbearance coming to an end and people who didn't make their payments couldn't come up with the back payments or whatever, they rolled their old payments into new ones. They just rolled,
Yeah,
they just
they extended
refinanced
the
their
loan to
house.
40 years. They threw it on the
Right.
back as a silent second. I mean, geez.
Right. And then even if they didn't do that, even if they screwed up their credit and couldn't get a loan or whatever, their house price probably went up. They just sold it for a profit anyhow. So they didn't
Sold
make
it,
any
walked away with
payments.
a check.
Yeah. No matter what, like they didn't, it just didn't. Yeah.
Yeah, it's not coming, man. So
It's
again,
not
all those
coming.
crash bros. Now,
Yeah.
again, there are some markets like Phoenix. If you are in a market where iBuyers are, there's some pain there because you got an extra 10 or 15% appreciation that you didn't deserve. That's coming off the top, but they will baseline. I mean, I talk to a guy in Vegas all the time, Phoenix all the time. They're already starting to baseline, right? Or whatever you want to call it, plateau or whatever. So it's not coming. And most of this is because the real reason I believe prices won't deteriorate even at 6% mortgages is because we're going to do sub 4 million transactions, not 6. That's the magic, right? The demand curve is shifted 30% lower.
You know, that's what, I don't know if you've heard my theory about what's going on with the mortgage-backed securities because of that, but what is it that you believe is taking place that's causing the Fed funds, when the Fed funds rates to go up, but not so much the mortgage rates on homes?
So I haven't heard your thoughts on this. This would be great to hear. Basically, what I think we have right now is the market, right? Bond, stock market thinks a recession is coming and imminent. It's going to force the Fed to cut by summer. And the Fed's like, guys, you're not paying attention. I've studied all the way back to 1970. This is very much like the late 70s. I believe the Fed's going to kill the Fed put. I think that's, you know, like if you were going to ask, you give Jerome Powell true serum, he's trying to get rid of that. He doesn't like it when the stock market whines and cries and Feds, you know, cut rates to bail out Wall Street. I think we're going to see some pain in Q1 as Wall Street realizes that they're not kidding. That's what I think. So. What do you got?
This is kind of a hard one. I've kind of went over this one, and it's a little bit difficult to try and explain. I think you're gonna probably understand it a lot better than even like most people, because I think a lot of it has to do with the mortgage-backed security market. Okay. And how the Federal Reserve during the quantitative easing programs was allowing people to roll over their debts, right? So there was a lot of mortgage-backed security production taking place, the issuance of mortgage-backed securities. Yeah. Not only through the refinancing, but also the amount of sales that were taking place at the time. So this gave the Federal Reserve a lot of mortgages to buy. by buying those mortgage-backed securities, they were creating a demand for them, which also had the investors interested inside of these mortgage-backed securities at the time because they could front run the Federal Reserve on it, right?
Absolutely.
So if they buy them, then the Fed's going to buy them. They could sell them to the Fed for a profit, right? So these bonds kept going up. These mortgage-backed securities kept going up, which drove
Yield
the
goes
yield
down.
down,
Yep.
right? So this gave the people, the households and businesses, the support that they needed during the pandemic, right? This is where, the low interest rates
One of the
came.
things, yep.
Right, one of the things, right? I mean, I'm not trying to claim it as a good thing. I'm just saying that's what the Fed
It
was
was a
using
fact.
as.
It's absolutely a fact.
Okay.
Okay. So far,
So
so good.
now here we are in a different situation right now, in which that the Federal Reserve is actually moving in a different direction with the mortgage-backed securities, and they are unwinding their balance sheet, allowing these allowing a certain amount of these things to either roll off or being sold into the market. Now, what this has done is driven up the yields on things, as the demand for these things is no longer there, coming from the Federal Reserve, right?
They were the largest buyer, 52% of the market. That's not good. Yeah.
Yeah, right. Not good. So now they're out of the market, right? They're not going to be in it any longer. And that has the investors going, well, if you're not in it, I may not be in it either, right? So I don't like this whole mortgage-backed security market if the Federal Reserve isn't going to be playing the game. So what ends up happening is the interest rates rise and home sales have diminished dramatically, right? The actual transactions of them have fallen, with anybody like in their right mind not refinancing their homes, right? Because why would you do it, right, if you're going to be rolling into a higher interest rate? Just doesn't make sense. So the mortgage-backed issuance has dropped by 2/3. Like there's only a third of the mortgage-backed security issuance taking place right now. So even though the mortgage-backed security had a bad rap back in the day for being a toxic asset, but it was filled with toxic assets. Now mortgage-backed securities are filled with mortgages that are actually sound mortgages that people like reasonable people. I mean, reasonable loans have gone to these people, and they're probably going to be making their payments. So these mortgage-backed securities are a much more sound investment than they once were, which is an attractive investment for investors out there when the yields begin to rise on these things. And because of the diminishing amount of mortgage-backed security issuance that is out there, those investors who are now playing in the game are bringing a support to the market that doesn't allow the interest or the prices to fall or the interest rates to rise any further than that. And that's why the Fed funds rate can keep ticking up. But as long as the housing market itself is cooling in sales and refinances, then I just feel that the mortgage-backed securities won't be falling, and that would keep it from rising.
All about transactions. You're absolutely right.
Did I get that right? Do you think I got that right? Because I got a lot of people arguing with me saying that is wrong, and I think I nailed that one.
No, you did. Yeah. Basically what happened, again, this is my point. The Fed broke housing. They didn't break housing today. They broke it 2 years ago because they created this ocean of mortgages become mortgage-backed securities. They are the buyer. Now we have a lake, and they're potential. And here's another thing. They'll have to physically sell. This whole idea that rolling off isn't coming. Who's going to refi a 2.8? No. So they're going to have to physically sell. Yeah. And it's going to roll off at extremely slow rates. And again, part of that's because they don't want to make the market move, right? They want to keep the ocean, I don't know, a Great Lake instead of the ocean. So you're absolutely right. It is supply and demand, and they are definitely governing that right now. You are correct.
Right. And now I think about this at the same time, I was just like, okay, so the interest rates are almost governed because of that, right? Like the bonds won't fall too far without finding some sort of support from the investors, which will support the yield prices from going up any further.
Well, this is why the Fed is. So the Fed is. Here's another. Where actually, you know what? Let me ask you this question. And if you don't know, or you don't have an opinion, that's fine.
No,
where do you think the terminal rate is? What do you think the actual terminal rate's going to be?
The terminal rate where they're no longer supportive or restricting the economy?
Where they stop raising rates.
Oh, where they stop. Oh, I'm sorry. Not the neutral, the terminal rate. Okay. Where they stop raising rates. Okay, that's going to be interesting because what I feel is that the Fed funds rate is more of a psychological number. what the real rate that's affecting the economy is what the rates were 6 months to a year ago, because it takes 6 months to a year before the Fed funds
Lag.
rate actually starts to affect the economy. So what they were 6 months to a year ago is what's taking place in the economy right now. So we are experiencing neutral at this point, right? And that's like, because the Fed funds rates were like 2.5% about a
Yeah,
year, 6 months ago, right? As they were
certainly
lifting
6 months
interest
ago.
rates
Yeah,
up. Right,
yeah.
6 months ago. I mean, yeah. So like this is where we're now
Okay,
experiencing the
I could buy
neutral
that.
rate, right? And so when people like are looking at how shitty the economy is right now, I'm thinking, no, you haven't even experienced pain yet. We're about
Yeah,
ready to experience pain. Over the next 6 months to a year, it's going to start kicking in.
yeah.
So in that case, at that point, I couldn't tell you where the Fed funds rates are going to be, but
Okay.
the impacting of the 2.5 or beyond the 2.5 from 6 months to a
It's
year
coming.
ago, that
Yeah,
lag, yeah, that's probably going to be more impactful. So
yeah. So
I
I,
don't know where
yeah,
the, yeah.
yeah. So I think that kind of ties with what I'm thinking. So the Fed funds, the terminal rate is the Fed presidents, the 19 Fed members, they said they're going to go to 5.1.
Mhm.
I don't think they get there. I think they're talking tough. I think they're trying to scare the market. I think they're trying to they're trying to cause negative wealth effect, all these things because they want the economy to slow down. They want to, they want some pain. So right now, I think we're at 4.25 to 4.5. I think we get a quarter point raise February 1st and a quarter point March, whatever it is, 13th, 16th, whatever. And then they're done the rest of the year. I don't see a cut next year. I see 2 quarter point moves next year. That's what I'm thinking. Because to your point, the pain is going to come like a tsunami, right?
Mhm.
And it will start landing
Right.
March, April, May.
Okay. Here's the other thing. For years, and pretty much the constant strategy that I have always seen is that the Federal Reserve shoots for a 2% target
Mhm.
on inflation.
Yep.
They've changed that.
Yeah, they have this whatever fate thing, this average duration
That's
nonsense.
right.
Yeah. Yeah.
Average inflation. That's the reason why they kept interest rates extra low, extra long for an extended period of time, is to create the inflation that they did not experience for the previous 10 years.
Hmm. Yep, that's
So
true.
what they're going to do is that when the inflation comes down to the 2% target again, they're going to
Mhm.
keep interest rates elevated for a significant amount of time to make up for the fact that the
No
inflation was
question.
running hot, right?
Exactly. There's no question.
So so this is where I think a lot of the markets has misinterpreted, including the bond market,
I agree.
thinking that the Federal Reserve is going to be performing their Federal Reserve reversal once the inflation comes down to
The
the
Fed
2%
put is
target, but that's
dead.
not going to
It's not
happen.
coming.
It's going to stay elevated for a significant amount. Well, I wouldn't say a significant amount, but much longer than what people
Much
are
more than they
anticipating.
expect. Yeah.
Yeah.
Yeah. I agree. And I believe that the market will eventually pick up on it. I mean, the Fed's telling them every time, but there's this non-belief going on right now. Yeah, but I agree with you. And I've said it out. I say it almost weekly on my channel. Guys, you're not paying attention. Not paying
Hmm.
attention.
Yeah.
You're hoping and praying it's not coming.
Um, what's the first step that I do?
I think you need to figure out your buy. Like, I think you need to know your little area. And again, this is the key. I would do something around your home that you drive around. It's not because you're going to buy there, but you can look at it. You can, if there's an open house, you can walk through it. You need to spend 90 days figuring out your golf swing with real estate investing. Real estate investing shouldn't be gambling. You shouldn't bet on appreciation. You should just understand what average is around you. And then because you have a construction background, you can probably pick up deals like I just did. The market that is coming, FHA, VA buyers, first time homeowners, they need perfect properties. The property that's going to struggle, in my opinion, is first time home buyer home that's not been loved for a decade. Old kitchen, old baths, all these things. Because no first time home buyer is going to qualify because it doesn't pass inspection. That gives you and I ability to negotiate a sweetheart deal and do the work. So I think you need to figure out average for a buy box and get focused. Most people, Simon, are not focused. They're gonna come to me day one and go, Michael, I'm gonna look at all the 3 bedrooms in this part of town. And then we talk in a week and they're like, well, I looked at a condo and I looked at this, 5-bedroom ranch and I'm like, dude, you told me you were gonna look at 3 bedrooms. What the hell? So you got to be focused and consistent.
Yeah. Um, In the beginning, how much physical work did you put in?
None.
None.
None, zero. It was about figuring out what an average 3-bedroom or 4-bedroom, two
Okay.
bath, 2-car garage house was, figuring out what my taxes were going to be, property management fee were going to be. It took time. Right? I don't gamble until I could tell my wife, whose name is Olivia, an average yield in Fresno in 2002 in the Mayfair district for a 3 or 4-bedroom was 7%. I wasn't even qualified to write an offer, let alone buy something. So I believe you got, repetition and practice to do.
It's really because I mean, pretty much you just nailed it down. It's just a systematic thing, right? If the
It's a
numbers don't
system.
fit or they fit, it's just one or the other, right? Yes or no. Like,
Yes, sir. Yeah. You figure out average. Do you like it? Then here's the last thing. Once you know average, let's say it's 6%. I don't know about you, but Simon, but I hate being average. So if average is 6%, I'm only going to do a great deal, which is 9%. I want everybody that follows what I do at one rental at a time to only do great deals. The next 2 to 4 years, we have no idea what's going to go on in the economy. So why do average? Now, here's the rub. Finding a great deal in any market is hard. I will tell you this, it's easier today than the last 3 years. I looked for 3 years in a row, wrote 250 offers, and got 3 counters. No deals. I'm serious about this. I do what I say. So, but the market that's coming to us is much better. 87% of the people have given up. Awesome. Let's go. But you got to do the work first. No gambling.
yeah, yeah, man. This is, it's a bummer for me. I'm 46 years old, and having lost that house and having gone through everything, it's like I really kind of put a mental block up on real
Yeah.
estate. I gotta back
You
out of
got to
that.
take the brick out of your bag, put it on the
Yeah,
ground. And
I
this
really
is the
do.
key. So I've been in the game since '02, right? So I've known people that were worth 10 million bucks that lost it all in the Great Recession. They had a couple of things go sideways. Once went, they couldn't save anything else. Bankruptcy, divorce, just all kinds of bad stuff. But that's why I do the work. Do the work. Be consistent. Don't rush. Don't gamble. Don't write an offer until you can tell me what average is. And then once you know average, only do great deals. It's a process. It's consistency. Most people out there don't focus, and very few focus and have daily discipline. That's rule number 1 and 2. Focus and daily discipline.
Yeah. Well, I mean, I'm certainly interested in it. Just like I said, it's like everybody that I ever hung out with that had any kind of significant amount of like money to them or any kind of lifestyle that I would ever want to have in my own life, they all did it off of real estate, every one of them. So
I
it's
am
just
here.
like I don't think I have any other choice, you know.
Yeah. You know what? I'd love to come back, have a conversation with you. I think you need to figure out a buy box.
Okay.
And I think you figure out a buy box. You look at a couple of listings, and then we talk about what you see out there. If you want
Yeah,
to
that's
come
right.
back and do this again.
Man, I would love to. I really appreciate you, hearing me out and listening to me. I mean, sometimes I get a little out there, so I mean, I do
Oh,
appreciate you
it's great.
taking the time to talk to me, man.
I love to get back. Again, I've devoured so much of your content. I feel like this is my little way of giving back. So do me a favor, get a buy box, and when you
Okay.
want to get together again, we'll do another one of these. And again, my idea is to help you. I will publish this tomorrow, probably at 9 a.m. So hopefully it helps others that are kind of, looking to get started. So I give it all away.
Well, I'll figure out my buy box and then learn what average yield is in my area, right?
Yeah, figure out buy box. You
Okay.
know what? Do this. Figure out your buy box, build a spreadsheet or tracking, however you do that.
Okay.
Get to a list of like 30, then show me what you got. Because
Okay.
I don't, and then we'll get you to average. But let's make sure you got the basics.
Okay.
All right.
Man, thank you.
Awesome, Simon. Take care of yourself. Keep doing what you do. Keep helping everybody. You're amazing. Take care.
All right, man. You as well. Thank you.
Thank you.